Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is July 8th, 2025. I am Luna.
I am JPMorgan. Looking at the immediate market picture, stocks in the U.S. really took a tumble. The S&P 500, the NASDAQ, the Dow, all dropped somewhere around, 0.8, 0.9%?
That's right. And it was pretty broad-based selling, but you could definitely see where the pressure was most intense. Trade-sensitive sectors. Think about Toyota and Honda. Their U.S. shares slid almost 4%. Even the big tech names like Apple, Alphabet, down 1 or 2%.
Okay, so not just equities feeling the chill.
No, definitely not. You saw gold, the classic safe haven, push up near its all-time highs, around $3,335 an ounce. That tells you something. And the 10-year Treasury yield, hovering around 4.38%. Again, investors looking for stability.
Right, seeking safety.
Exactly. Even Bitcoin eased back a bit, around $108,000. And WTI crude oil, well, that pulled back into the mid-$67 range. It's just a classic risk-off kind of mood. People are shedding the riskier stuff.
So we see the reaction, but what actually spooked the market this week? Was there one big catalyst we can point to?
Oh, absolutely. And it came straight out of Washington. President Trump renewed tariff threats, quite dramatically, actually. He basically said, look, if negotiations don't work out starting August 1st, expect 25% tariffs on Japan and South Korea.
25%. Wow.
And potentially even higher for others. Thailand, Tunisia, Laos, maybe 25 to 40%. He used the term reciprocal tariffs, sort of an eye for an eye idea, matching tariffs others have. Plus, he mentioned a possible extra 10% penalty for BRICS nations if they pursue, quote, anti-American policies.
Okay, that sounds pretty significant. And the market reaction to those specific threats, how fast was it?
Almost instantaneous. The dollar jumped more than 1% against the Japanese yen and the South Korean won. Currencies directly in the line of fire, you see. And those sectors we mentioned. Automakers, tech with global supply chains, they saw the biggest hits. It's not just the direct cost of tariffs, it's the uncertainty they inject. That's key.
Right, the not knowing what comes next.
Exactly. It makes businesses hesitate, pull back on investment. It just amplifies the whole effect.
And it sounds like that uncertainty is being fueled further. I saw comments from Treasury Secretary Scott Bessent.
Yeah, that added another layer. He hinted at several trade announcements in the next 48 hours, mentioned his inbox was full of last-ditch offers from countries.
So more guessing for investors.
That's the thing. Sometimes the ambiguity is worse than knowing the bad news. It just creates this cloud of unpredictability. Will things escalate? Will they compromise? The next day or two feel pretty critical for getting some clarity.
Okay, let's shift gears a bit. Because it wasn't just trade, right? There was big news on the oil front, too. OPEC plus CAR.
Correct. A significant development there. OPEC Plus is apparently planning to fully unwind those voluntary production cuts, maybe by September. We're talking about adding back around 550,000 barrels per day just in September. The total increase since April could be close to 2.5 million barrels per day. Seems like a clear strategy shift.
Towards regaining market share, maybe.
That's the interpretation. Possibly some pressure from Washington involved, too. And this expectation of more supply, it's definitely weighed on oil prices, keeping WTI down in the mid-$60.
Which sounds like good news for inflation. Maybe. Cheaper gas.
On the surface, yes. Cheaper oil can help ease inflation, which is usually good. But here's the nuance, the sort of double-edged sword. If the reason they're boosting supply is partly because they anticipate weaker global demand, maybe due to these trade tensions slowing things down, then lower oil prices might actually be a symptom of a bigger economic problem.
Ah, okay. So not necessarily an all-clear signal.
Not necessarily. And it certainly puts pressure on energy company earnings, which we've seen.
All right. So we've got these major forces, trade threats, policy uncertainty, shifting oil supply. Let's bring it back to the listener. For you trying to navigate this, what does it all actually mean? What are the key things to think about for your portfolio, your strategy?
Yeah, that's the crucial question. How do you actually handle these rapid shifts? First, I'd say expect continued choppiness. Volatility is likely to stay elevated. Those tariffs, if they happen, could definitely bite into corporate profits and maybe push up prices for you as a consumer.
But the oil price drop could counter that inflation a bit.
It could moderate it, yes, but the tariffs might just offset that benefit, unfortunately. So the net effect on inflation is still a bit murky.
So for you, the practical advice is?
Stay alert, definitely. But try hard not to overreact to every single headline. Panic selling is rarely the right move. Make sure your portfolio is genuinely diversified. Does it still align with how much risk you're comfortable taking? Maybe look at companies more focused on the domestic U.S. market or traditionally defensive sectors. They might hold up better in a trade storm.
And keep that long-term view.
Absolutely essential. These kinds of drops, unsettling as they are, can create buying opportunities in quality companies if you have a long-term horizon and, do your homework.
Okay, so wrapping up this deep dive. It seems like vigilance, focusing on those fundamentals and avoiding knee-jerk reactions are really key right now with all this volatility swirling around.
Exactly. And maybe one final thought to connect this to the bigger picture. Think about how these aren't just short-term wobbles. These shifts in trade policy and energy supply, they could fundamentally reshape global supply chains, where things get made and what you pay for them for years to come. It's a really fascinating and frankly crucial area to keep watching. Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver day's key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.